Investing doesn't need to be complicated. You actually only need 1 or 2 different ETFs in your portfolio. And in this video, I'm going to share some simple but effective ETF portfolio options with you. And at the end of this video, I'm going to share step-by-step how to actually build an ETF portfolio. Thanks to Pearler for sponsoring this video, but I'll talk more about them later in this video. But first, why invest in ETFs in the first place? If you save $1,000 per month in a high interest savings account, which gives you a 5% interest rate, after 30 years, you could have $832,000. But here's where it gets crazy. If you instead invest $1,000 per month in a diversified ETF portfolio that averages 8% per year, after 30 years you could have $1.49 million. That's a difference of over $600,000. And that is the power of compound interest and investing. But before we even start investing, it's a good idea to check off these points. Build an emergency fund of 3 to 6 months of living expenses saved in cash in a high interest savings account. This is so that you don't have to dip into your investments at a bad time in the market, just in case any unexpected emergencies pop up, and pay down any high interest debt above 8%. Just remember that this video is general advice only and doesn't constitute personal financial advice. You can read my full financial services guide in the description. In this video, I'll also mention some ETFs based on a range of different factors, including low fees and how appropriate they are for long-term investors, and also their ranking with how well they do among the Pearler investing community. These factors may not suit your needs and are for educational purposes only. So the first portfolio is VDHG, which is the Vanguard Diversified High Growth Index ETF. VDHG is an all-in-one diversified ETF. It's made up of 90% growth assets, which are shares, and 10% income-producing assets, which are bonds. VDHG is essentially an ETF that is made up of a various mix of different index funds, including the Vanguard Australian Shares Index Fund, which invests in the top 300 companies on the Australian Stock Exchange, the Vanguard International Shares Index Fund, which invests in 1,500 companies from developed countries excluding Australia, and a few other index funds. The management fees for this ETF are 0.27% per year, which is a little bit on the higher side. The suggested investing time frame for this ETF is 7 years or more, so it suits long-term investors. If you invested $10,000 into VDHG 5 years ago, you would have $14,945 today. Just remember that past performance isn't a reliable indicator for future performance. The second ETF portfolio is DZZF, which is the BetaShares Ethical Diversified High Growth ETF. This ETF is similar to VDHG, but with a more ethical focus. Similar to VDHG, this ETF invests in 90% growth assets, which are Australian and international shares, and 10% defensive investments, which are Australian and international bonds. The management fee for this ETF is 0.39%, and it is higher than VDHG because they do actively screen out companies that don't meet their ethical standards. And these are the different country allocations in this ETF. The first is Australia with 42%, the second is the US at 36%, next is Japan at 4.7%, and more. DZZF has had an average yearly return of 8.51% per year since its inception in 2020. And if you're enjoying this video so far, it would mean the world to me if you could give this video a like and subscribe to this YouTube channel. So the next portfolio option is VAS and VGS. These ETFs cover the Australian and international stock markets without overlapping. This ETF portfolio allows you to spread your risk across different countries and sectors, and it's actually the most popular ETF combination among Pearler investors. VAS is the Vanguard Australian Shares ETF. The management fees for this ETF are quite low at 0.07% per year. It also suits long-term investors of 7 years or more. This ETF invests in the top 300 companies on the Australian Stock Exchange, so it allows you to invest in some of the biggest companies in Australia, including BHP, Commonwealth Bank, CSL, NAB, Westpac, and more. If you invested $10,000 into this ETF 5 years ago, you would have $14,695 today. VGS is the Vanguard International Shares ETF. This ETF invests in 1,500 companies from developed countries excluding Australia. This includes countries such as the US, Japan, UK, Canada, France, and Switzerland. By investing in VGS, you'll be investing in some of the world's biggest companies, including Microsoft, Microsoft, Apple, Nvidia, Amazon, and Alphabet, which is Google. The management fees for this ETF are a bit higher than VAS at 0.18% per year, and it suits long-term investors of 7 years or more. But this ETF does give you access to some of the world's biggest companies. The next portfolio option is FAIR and VESG. FAIR is the Australian Sustainability Leaders ETF. This ETF is similar to VAS, but with a more ethical focus. FAIR screens out companies with a significant involvement in fossil fuels, and it doesn't invest in any of the big four banks. Because of this screening process, FAIR does have less companies that make up this ETF, with about 80, compared to VAS, which has 300. Actively screening out companies does mean that this ETF comes with a higher management fee of 0.49%. However, for some investors, this is a price worth paying for peace of mind. A good partner to FAIR is VESG, which is the Vanguard Ethically Conscious International Shares ETF. VESG complements FAIR because it gives you access to 1,300 international companies screened for ethical standards. It excludes companies involved in fossil fuels, tobacco, and weapons. The management fees for this ETF are 0.18%. VESG's top holdings are Microsoft, Apple, Nvidia, Amazon, and Alphabet. So it depends on whether or not you think these companies align with your values. And if not, you could look into another ethical ETF like ETHI, which is the BetaShares Global Sustainability Leaders ETF. ETHI's top holdings are slightly different with Nvidia, Apple, Visa, MasterCard, Toyota, Home Depot, and more. If you invested $10,000 into VESG 5 years ago, you would have $18,074 today. So now we have some different ETF portfolio options. I'm going to take you through how to actually build an ETF portfolio step by step. Now you're probably wondering how you can actually get started building your ETF portfolio. And that's why I'd like to introduce you to Pearler, who is the sponsor of today's video. And if you'd like to try them for yourself, you can use my code Queenie for a $20 credit. Pearler has a really amazing auto invest feature, which allows you to build a portfolio of ETFs really easily. And the app is suited to long-term investors who are looking to invest in ETFs. So let me show you how to invest in an ETF with Pearler. First, you go into the Pearler app and then you just click on this icon, invest in AU shares, and here you can search for any ETF or stock that you would like to purchase. Let's use VDHG as an example. So I just click on it. Here it gives me more information about the ETF, and I simply click on buy. I can put in how much I would like to purchase, for example, $1,000, and then to make the investment I simply click on next and confirm. Another option is to auto invest with Pearler, and I'll show you how to set it up. So first I click on automate, and then I go to tell us how you want to automate. I can choose to set up recurring deposits or round up. I usually do recurring deposits. Add bank details, set bank account. I can choose how much I would like to deposit, for example $1,000 every beginning of the month. Continue. Here I can choose to invest once it reaches a certain threshold, or by the dip. I'll just choose thresholds when my cash reaches $1,000. And here I can build my share portfolio, for example VAS, which I'd like to invest say 30%, 70%, which I'd like to invest in VGS. And then I just click next. Here I can choose my investing strategy. I'll just click lowest share and then review and then save. And don't forget, you can use my code Queenie for a $20 Pearler credit. And write us a comment below with the word Apple in it, just so we know you watched this video all the way through.
Thank you.
Bye.